Hi friends, this is Nupur, and today we'll be talking about a very important section, section 194N. This section was introduced by the Finance Act 2019, and this section was applicable from 1st September 2019. However, the section is now amended by the Finance Act 2020, and the amended section applies from 1st July 2020. So let's first of all know that what is section 194N. Section 194N is basically a section which deducts a TDS on cash withdrawals. The purpose of this section is to curb all the cash transactions and to increase the tax compliance. There are various receipts and payments which are made in cash in India, and therefore in order to curb those transactions and to track those transactions, this section was introduced. Applicability of section 194N. This section is applicable to all the persons who withdraw cash from bank or cooperative banks or post office above a certain limit. All persons means be it an individual, be it a HUF, be it a partnership firm, be it a AOP, be it a BOI, be it a company, be it a artificial jurisdiction person. So any person who withdraws the cash from any bank, from a cooperative bank or from a post office, there is an or in between. So if you withdraw cash from bank, or if you withdraw cash from cooperative bank, or if you withdraw cash from post office, there is a certain limit. So above that certain limit, if you withdraw cash, this section 194N is applicable and TDS shall be deducted on such cash withdrawals. Now let's understand what are the provisions of this section 194N. TDS at the rate 2% shall be deducted on cash withdrawals exceeding 1 crore in a year, and for those whose PAN is not updated, TDS shall be deducted at a higher rate of 20% under section 206AA of the Income Tax Act. As we all know that in case the PAN is not updated with the authorities who have to deduct TDS, in that case a TDS at the rate of 20% is deducted under section 206AA. Now, in this case, in 194N, TDS at the rate 2% shall be deducted, and that amount, that TDS will be deducted in case the cash withdrawal exceeds 1 crore. So, in case your cash withdrawal is suppose 1.5 CR, so the TDS shall be deducted on the remaining 50 lakh rupees rather than on the entire amount of 1 crore 50 lakh rupees. So, here it is clearly mentioned that TDS shall be deducted on cash withdrawals exceeding 1 CR. Till 1 CR, no TDS shall be deducted. Exceeding 1 CR, the TDS shall be deducted at the rate of 2%. Now, there is a proviso to section 194N. The proviso says that in case of a recipient who has not filed the returns of income for all of the 3 assessment years relevant to the 3 previous years, for which the time limit of file return of income under subsection 1 of section 139 has expired, immediately preceding the previous year in which payment of sum is made to him, the provision of this section shall apply with the modification that sum or aggregate of sums withdrawals in a year shall be 20 lakh instead of 1 crore. And TDS at the rate 2% shall be deducted in case amount paid in cash exceeds 20 lakh but does not exceed 1 crore, or TDS at the rate 5% shall be deducted in case amount paid in cash exceeds 1 crore. So here a proviso is added to section 194N, which says that in case any person he provides his ITR for the previous 3 assessment years, that is relevant to the 3 previous years. So for 1st July 2020, that is the applicable, that is the year from which the proviso or the amended section applies. For this, the assessment year is 21-22. That is the financial year is 2021. So previous 3 financial years, that is previous 3 financial years will be 19-20, 18-19 and 17-18. And the relevant assessment years will be assessment year 18-19, assessment year 19-20 and assessment year 20-21. So in all these cases, if you so for the applicability of this section from 1st July 2020, if you provide your income tax returns for the 3 previous years, that is for financial year 17-18, financial year 18-19, and financial year 19-20. If you provide that we have already filed our ITRs for the three assessment years relevant to the three financial years, then uh, normally the rate of TDS will be 2%, and the limit will also be 1 crore. But suppose any person he had not filed his return of income previous 3 years, then that limit of 1 crore shall be reduced to 20 lakh rupees. And as soon as a person withdraws any amount above 20 lakh rupees in cash, the TDS shall be deducted at the rate of 2% till the amount of cash withdrawal reaches 1 crore. And once the amount of cash withdrawals exceeds 1 crore, a TDS at the rate of 5% shall be deducted in that case. So there is a tax slab in that case, but from 20 lakh exceeding 20 lakh to 1 crore, that is 80 lakh. 80 lakh way 2% TDS will be deducted, and anything above that, anything above 1 crore, 5% TDS will be deducted. So this is a thing that in case you have to provide your ITRs. This section, the provision to this section has made it mandatory for every individual to provide their ITRs to the banks, to the cooperative banks, or the post office from which they withdraw their cash. Because if they do not do it, then their limit of 1 crore shall be reduced to 20 lakh, and above 20 lakh they have to a TDS of 2% shall be deducted. And once that limit, the cash withdrawal limit exceed 1 crore, again a 5% TDS shall be deducted. So I hope you have understood this section, and in case of any queries, please do comment, and thank you.